Well, we're in the middle of a very challenging presidential election year, and I think by any historic standard, it's been a divisive one thus far. One of the questions that borrowers are bringing to the table and are asking for context on in terms of its impact on multifamily commercial real estate is how the political environment might be impacting the business.
Well, clearly the election and the personalities lead to a lot of uncertainty and instability. Anytime you have uncertainty and instability, people have fear. And nobody knows what's going to happen. And when there's fear, people back up, and it raises a lot of other questions. If you couple that with what else is going on in the world, I think people just have a huge concern.
Ivan, you mentioned some of the markets around the country that have come under pressure in terms of job creation, the labor market, because of what's happened with oil prices over the last couple of years. Overall, the data seems to be telling us that the labor market is reasonably strong, that we're creating jobs, unemployment rates are low. What do you see happening in the labor market over the next year?
The recent trend is we have some real wage growth at a better pace. It's interesting because rent growth, has way outpaced wage growth. And I think there's a little bit of a catch-up going on. And there's almost a reversal here, whereas rents outpaced wage growth, you're going to see wage growth start to catch up to rent growth. But there's not a big projection in rent growth.
Sure. Now, one of the things that I think borrowers are asking about as a potential threat to that labor market outlook and to that wage growth is some of the external shocks that we might experience in the United States. One of them that they're asking about is what's happening in China, which I think we don't have a lot of clarity around in terms of how their economy is slowing. The other, if you could tell us a little bit about your expectations for how a potential British exit from the euro area could affect the U.S. economic outlook.
I think China has a big impact on real estate in the United States in various ways. So much money has come from China to invest in U.S. real estate. We all know about the EB-5 monies. That's still available. It probably will go through 16. It may change. But to the extent that currency flows stop from China, it will impact the investing in the United States. But it's not just the China issue. We have currencies throughout this country which have been devalued. So it's going to affect exports, which will affect jobs and wage growth. It's going to affect the ability of those people to buy in the United States. I mean, it wasn't that long ago where people from Europe were getting things at $1.45 versus $1. Now that's down to $1.10. And I think that factor is going to affect people buying condos and other real estate throughout the United States.
Sure, if you're a Canadian investor coming to the United States, then over the last couple of years, everything has suddenly gotten a lot more expensive. Do you see that limiting or acting as a drag so far on some of the foreign capital flows into the U.S. real estate market?
I think it's not just a drag, it's almost a cutoff.
Okay.
I think that whether it be South America, whether it be Europe, whether it be Canada, China, I think that there was almost a party going on here. They were able to buy our real estate at 30, 40 cent discount. And in addition, they were trying to get their money out of their country. Now there are restrictions of getting their money out of their country, and there's no longer that discount. And I think that's why you're seeing, or you're starting to read, about a tremendous overhang of condo inventory in the United States.
One of the last questions at a macro level that a lot of people are asking about is with respect to interest rates. And this has obviously been a difficult one to answer over the course of the last couple of years. As an economist, I've been anticipating an increase for many years, and it simply hasn't materialized. How big a challenge do you see interest rates being over the course of the next year, or for borrowers today, in terms of their ability to refinance, let's say a couple of years down the road?
It's been interesting. Not only have the economists been wrong, but I think everybody has been wrong. I mean, we're used to decades and decades of higher interest rates. And do we accept that we're in a lower interest rate environment? It's hard to accept something you're not used to. So to the extent that rates rise, it's going to be very difficult to refinance a lot of these transactions that were done at low interest rates. In addition, low interest rates have really fueled a lot of the loans that were out of the money now to be in the money. So I think that's a variable nobody can predict. But if rates rise, I think it's going to create a lot of issues for borrowers with existing assets that mature.